with the dollar as always, which was interesting because we did have CPI, which did cause some bearish momentum, but it looks like that has turned on a dime because it looks to me that price is a little bit bullish now, or at least this morning anyway. So I'm a little bit, again, the direction isn't clear with the dollar. It's very messy, as we can just look at the chart. You don't have to be, a specialist to say that the market is sideways, market hasn't really trended well. So in terms of direction, it is still very much up in the air. And in terms of my long-term bias, I'm very much being very reserved with that now. At the moment, it looks like price is more or less holding support, and perhaps we're having a bounce. We did have a big fake out early in the week, which was this move here. As price broke below support, then recovered, it looks like to some degree we are still respecting that as support. And if that is the case, we could see price rally to the upper end of the range, which will take us to around 98.6 in and around this area here. That could be the move dollar is prepared to make. If I am going to be bearish with dollar, then I do want to see clear signs of price breaking again outside of this range, but more or less taking out this low. If price can take out that low, especially with some pace, some impulsive price action, that would be a clear sign that, okay, we well and truly are breaking out of this range. And probably at that point, you are going to see a continuation back to the lows here at 96.4. So I would be pretty bearish on that at that stage. But at the moment, it looks to me that we've had the fake out, price has recovered the range, and to some degree, we are still kind of respecting as support. It's not clean at all, but I would suggest that price is still above support and rejecting it right now. And we're seeing some strength this morning, although this candle still does have 2 hours before it does close. But we are seeing some strength, and price is reacting as support. And the biggest takeaway is that price is really messy. So don't try and get too carried away with the intricacies and the smaller moves, because you probably get chopped around. You want to focus more so at the extremes of this range, buying at the lows, selling at the highs, and the middle is where all the noise will be. And until price does make a sustained break, whether it's to the upside, whether it's to the downside, we'll find out hopefully soon. And in terms of trending opportunities, they should follow afterwards. But as of now, still difficult to say, but it looks like support's holding. So I do have somewhat of a bullish bias on the dollar. So taking that into euro, we're pretty much seeing that copy and pasted with the price action here with euro dollar. So again, you've got the upper end of the range more or less here. Of course, this was the fake out at the start of the week alongside what DXY did. And this, of course, would be the low of the range. You've got price consolidating there as well. So this is price back and forth. And at one point at the start of the week, it looked like we had the breakout, and I was talking about price potentially pushing back to highs over there, and that was the plan. But I did say price does need to stay above this area. If we do break back within the range, that plan goes to it goes up in flames, really, because now we're back underneath resistance, we're back in the range. The choppy conditions we once had is still in play, and for the most part, it does look like price is respecting resistance. If I draw an area around that high, take it across, we're still seeing rejection at the highs here. So potentially euro again could be in for a move down. If the DXY is going to rally, that should take euro lower. And since we are still trapped within the range, it's not a bad place to be looking to a short. I'm not the biggest fan of the trade, so I'm not jumping in myself. I do have a couple of USD pairs which I do like the look of, which we'll take a look soon. But this is not a bad opportunity. Stops above the high there, or if you want to be a bit safer, stops above the high there. And just looking for a swing to the low of the range does make some sense. Price is back at resistance, you're using the fake out to your advantage. Any early sellers of the market would have been taken out with this move here. So now potentially you might see that real momentum come in and see a push to the low end of the range. But of course, equally with this move, we do need to stay below this. If price does close above, hence why having a stop loss above the highs there makes sense. Or of course, if you want to give yourself a bit more room, you can have it above the highs there as well. But yeah, if we are going to see a push down, we do need that resistance to hold. Likewise with DXY, we do need that support to hold as well. But at the moment, we are rejecting well, and it looks like that's the case. Pound USD having trouble at the highs. I did say I wouldn't mind some shorts on pound, and I don't mind shorts on pound, to be honest. Just looking for possibly more of a short-term move, but I do want to see one more push higher. I want price to take up the highs here and then get the sell, just so I can get my stop loss above this resistance and position myself well in the market. Because as with euro, I kind of see pound in the same light. Basically a market that's ranging. We have key support below us, key resistance above us, and price has done a good job to respect both of those areas and stay trapped inside. So the best ways to trade pound USD in my point of view is, again, looking to pick the lows or looking to pick the highs. And I would be happy picking the highs here. Yes, price more or less is respecting resistance right now, but I would like price to be a little bit higher before taking that position there. So yeah, I would hope to see price spike higher, take out 1.359, and then hopefully see price roll over from then onwards, and then maybe a push back to 1.33778. So yeah, that would be the plan there with pound USD. In terms of dollar CAD, so dollar CAD is a pair which I do like the look of this week, but not quite fitting the plan. I did take some shorts earlier this week, which didn't go to plan either. I was looking for a push into the supply zone and a move down. Didn't quite see the momentum kick in. So I'm looking for another short opportunity on dollar CAD, this time back at the highs here. Similar idea, looking for price to top out basically and see another high form and us to roll over. From a weekly perspective, we are testing very key levels of resistance. Looking to the left, I've talked a lot about this level. It's a very, very significant level in the market, and you can see every time we get there, we've seen some very violent reactions and very big moves as well. And this could be viewed as a massive fake out. Price exploded through the level, only to come back equally as violent, equally as impulsive back below. And now we're still testing the top end of the range. So as long as price can remain below that, I do think within due course, price will eventually roll over back to these lows, so on and so forth. So I am pretty long-term bearish on dollar CAD. So if I can get some shorts at the high, although it is a little bit more on the risky side of things, because you could definitely argue dollar CAD is in somewhat of a bullish trend here, but it's a very flat one, not really seeing much momentum. We are still seeing aggressive selling pressure at the highs. So I wouldn't mind trying to take my chances with this. So dollar CAD, shorts look good, but I would wait for a push back to 1.392. Also, this move here is really corrective. So it's not like we're seeing very impulsive price action and a lot of bullish momentum. The market is very, very flat and very tired. So if we do get back to highs, reject well, I do think there's a likely chance we top out and price does make a drop. So shorts on dollar CAD look good. Equally though, shorts on Aussie dollar look good as well. And it's funny because they're both opposing biases, if that's a word, biases. I think that's a word. But yeah, I'm looking for USD strength with Aussie dollar if I'm looking to short it, or I'm looking for USD weakness if I'm looking to short dollar CAD. So there are opposing directions at play there. Of course, one will probably play out and one will probably fail. Which one, I do not know, but I'm going to keep an eye on both. At the moment, Aussie dollar did make a really aggressive move past this high. I did say yesterday, this was at the top of my watch list, Aussie dollar shorts at this high, looking for an entry and a push down. I did say I was going to wait till after CPI to enter. Again, all my entries on the 4-hour chart anyway, so by default, I had to wait till after CPI to take the trade because that's when the 4-hour candle is going to close. But after CPI, we got a really aggressive wick down and a pretty strong close there. So that was a sign that, okay, momentum is still just about with the buyers. Not necessarily showing much because we're still trading at resistance. So this is still a good selling opportunity. But we are still seeing strength, so be cautious. And then, of course, the following candle came through thick and fast and really did break above that level. Although the shorts are still valid, but I would need to see price push down pretty aggressively back below the level. Support resistance is not always perfect. Not always price will react, perfectly or bang on a level. Sometimes it will breach the high of a level and redeem itself, and vice versa with support. So if price does come crashing back down really well, I don't mind taking a trade like this with an entry similar to this, stops above the high, and I'll be happy with that trade because my stops are already in a really good place. Because if this is going to be a fake out, I shouldn't see price come back there. If price does come back there, I'm probably in the wrong direction. The trend's going to continue higher. So I quite like the stops from that perspective. The entry's near enough at the high, and I'll be well positioned to take advantage of any move down if that is going to be the case. So I'm still keeping a close eye on Aussie dollar shorts, although it's not looking promising right now, of course, with all that momentum. But the market can surprise you, especially if the DXY is going to make a move up. That should help Aussie dollar push down. So we'll wait and see if that does develop. If Aussie dollar just continues to trend higher, I would ignore it. The market's bullish. No shorts for me. New Zealand dollar, same thing here as well. Strong push up, but again, not really seeing that continuation just yet. So I still am a little bit mixed. We are coming back to supply here. For this zone to be disrespected, if price was to break above the high there, that's when the bearish bias is completely put to bed. Of course, we have broken out that channel, so that was the first sign that the market could be shifting from bearish to bullish. We've had a really nice bearish trending market, lower lows and lower highs. Then recently we did see the break to the upside outside of the channel, so that was a sign to say that, okay, maybe the sellers are not going to play out anymore. But we were still respecting supply, so that is still a confluence which could take us lower. Again, trend lines are not necessarily the most trustworthy confluence. They are good. I use trend lines. I use counter trend lines as well. But of course, I'm still aware of market structure, and this is still an area which price could go against us. And of course, if USD is going to be strong, it's going to be difficult for us to continue. So I'm going to keep an eye on to see how we do maneuver here. This could still be a nice area for a sell, but I probably would wait for us to maybe form a somewhat of like a double top before shorting, because we're still creating higher highs and higher lows. So I do want to see the market kind of fail at highs or show some really aggressive selling pressure. And that could be a nice short. I do like Aussie dollar a lot more, so I'll put my eggs in that basket for now. But still could be an area to short. And if, of course, price does break that structure, then I'll completely shift to bullish. And at that point, we'll be looking at these highs as targets. So that'll be target 1 and probably target 2 if we get the break of structure, of course. As for gold, yeah, gold just a little bit flat, but we did see some type of continuation there. We were speaking quite a lot. In fact, if I go to the hourly chart, we're speaking quite a lot about two areas for buys. We spoke about the low here as a nice place for a buy, kind of like a nice bull flag pattern. I actually posted a video about how to trade this pattern. Really common pattern, you see it pretty much all the time. And very nice opportunity there for a push. And of course, the CPI did help that trade as well. So there was nice rally. We also spoke about this area below. I said if this area doesn't do its part, if we do break, then this will be the next area of interest, around, well, just below 3,600. Of course, that level was not needed, at least not yet anyway. Nice buying opportunities. I did say, though, for gold, don't be too greedy with targets, though. I said a push back to highs here could be a nice place just to close the trade, or at least take a decent chunk, because I still do think gold is quite overextended. Of course, gold can still go higher, don't get me wrong, gold can still go higher, but it depends how you want to manage your trade. I think if you're really trying to take advantage of gold to the highest degree, trading stops will be the best way to go, because you don't know how far gold can trend, and if you're just trading stops, you put yourself in the best place or best position to take advantage of that. If I was trading it, I'd probably take most of my profit off at the high here and leave the rest of the trail. Because, yeah, we are quite high. I don't necessarily trust the market to completely explode. Maybe we do see another bullish leg. But, yeah, I would take profit at the highs there. But, yeah, as for next for gold, you probably, again, if you're looking to buy, I wouldn't be looking to short at this moment in time. So I would still be buying, or at least looking to buy. So again, if you're looking for another buy, it would be back at the lows, kind of repeating this pattern here, just about sweeping the lows, then a buy. I would look for the same thing. Or maybe we see a bigger push down into that demand zone, and then we see the buy. But in terms of entries, this is the general location of where we want to be finding our entries. This area here, yes, maybe price does rally, but I wouldn't necessarily be overly confident buying into that level, even with how bullish gold is. And silver doing its thing as well. Really nice rally. What chart is this? This is the hour chart. Okay, I thought I was on the daily there. I was going to say what the... but yeah, I mean, the daily chart doesn't look much different, does it? Yeah, no. So yeah, very, very bullish stuff there from silver. We broke out the consolidation. Nice strong close. I believe that was after CPI as well. And the rest is history right now. So pretty straightforward with silver. Very bullish market. You're looking for your pullbacks. A nice zone there to keep an eye on. If price can pull back to that level. Could be some nice buying opportunities there. Take it back to highs, and then so on and so forth. Similar to gold, if you really want to take advantage of silver to really kind of maximize your rewards, you're looking for those trading opportunities, trading those stops, because we don't necessarily know how far price can go. Again, we do have the long-term targets at 50, which is where the all-time highs are. So that's why I do expect silver to push towards, but of course we can have some pullbacks before then, and then things can change, but I still do think there's more room. But in terms of the current momentum, in terms of intraday, yeah, buys is still your best bet. I wouldn't try and look to call any tops.